right. So again, investment real estate, it could be public stock, private stock. If you're going to sell something, just ask yourself or your CPA, is this subject to capital gains tax? But just think of it like an asset, okay? So, and if it's within the United States, it's called a capital gains tax. So again, cryptocurrency, stock, primary home, investment real estate, private practices, anything that is associated with that is subject to capital gains tax.
Add something very quickly that I know we've discussed before, which is the planning stage, right? We're going to touch base on this throughout the 5, right? But we mentioned that quick note about your CPA, and the one thing that we've continually covered in our discussions up to the webinar is how important it is for someone to get ahead of this. We capture it all the time, right? I sold an asset or I sold my business. It's such an intense process just getting to the finish line, right? Just closing the deal, whatever that may be for you, selling your home, all the ways in which Brett mentioned. But really, you should be 30, 45, 60 days prior to actually getting through that transaction, incorporating this and making this part of your strategy. Because once you're done, now you're facing the tax burden. You really kind of have another hill to climb. And so, we'll try to give some innuendos and timeframes for those people, but I think as a rule, and Brett, you tell me if you think we need to go further in this, I think a minimum 45, 60 days prior to when you're supposed to close on the transaction is really a good time to start getting ahead and putting together a strategy, if not sooner.
Yeah, I would agree with exactly what you're saying, Matt. And the key would be just do your due diligence on the tax deferral exit planning before you actually go into escrow and you sell your deal. Right? If you're selling something for $1 million, $5 million, $10 million, $20 million, $50 million, you owe it to yourself, right, to make sure you do excellent planning and you pre-plan. And we encourage you to do it before the emotional tie-up in the actual sale is going to, kind of fog your judgment, right? We want to make sure that the emotions are out and just do your due diligence on this tax deferral strategy. We're going to be talking about opportunity zones, 1031 exchanges, deferred sales trust, Delaware statutory trust, charitable remainder trust, these different strategies, and find out what's best for you. And by pre-planning and having that exit plan ready to go, then focus all of your attention on selling. But yes, in general, if you are coming down to the wire, 45, 60 days, we want to get ahead of the game here.